Our next guest expects more dispersion in the Mag 7 stocks next year, with the AI trade moving from the picks and shovels to the adopters. What does she mean by that? Liz Ann Sonders is the chief investment strategist at Charles Schwab. Liz Ann, it's great to see you. Just straight off the top of your head, what do you foresee for 2026?
I think some of this broadening out is likely to persist, maybe not in a linear fashion, but in fits and starts. Over the past 6 months, it's only 17% of the constituents within the S&P have outperformed the index itself, but over the past month, that's up to 61%. So that's one way to measure breadth. You see it in small caps, which of the three major indexes, Russell 2000, S&P, and NASDAQ, small caps have the best improvement in breadth relative to both 50-day and 200-day moving averages. I think there'll be bouts still where you come back into those prior leaders, but I do think that there is money looking for more diverse places to go.
Right. And do you look, I think most people would say, well, good. You know, they've had their run. It's time for the rest of the economy to start clicking and performing. And yet the flash PMI data this morning wasn't that great. So hopefully this narrative doesn't stumble. I mean, the market today, you've got stocks under pressure and yields down. That feels like kind of a classic slowing economy, risk off kind of backdrop.
I do think the economy is showing signs of slowing, and I would expect that to persist in 2026. So far, the trajectory of earnings has not weakened commensurate with some of the data that we're seeing at the macro level. And I think that is really important as we go into 2026. We stopped just aggressive multiple expansion in about August of this year. The April to August period was just a rip higher in multiples. You had rising earnings growth and expectations thereof at the same time, but multiple expansion went well beyond that. Since August, multiple has been kind of flat in sort of a choppy pattern, but earnings have continued to accelerate. So earnings, for now anyway, are doing more of the market's heavy lifting. But you're right, that is the thing that has to hang in there for another strong year in 2026.
Yeah, small caps, what's your view on them? More people are turning positive on them. They've had a couple of strong weeks lately, but still this is the space would be under pressure if we have, bad earnings quality, economic slowdown, persistent kind of inflation stickiness or higher interest rates than expected. What do you think is going to go on here?
So I totally agree with that, Kelly. I think the key is staying up in profitability, particularly since the April 8th closing low, the Russell 2000's constituents that are unprofitable, and that is about 40% of the index. Their stocks are up 62% since the April 8th closing low. That's in contrast to the profitable stocks up, let's see my notes, 29%. But recently, you're seeing more of an acceleration in those profitable stocks. So what we've been saying is you want to fade the unprofitable, lower quality segments within small caps, but lean into the higher quality profitable segments.